Hello friends, good evening. Welcome to the new video. So at first let us look into OHLC data. So the market opened at 16,600 and it made an high of almost 16,647 and it made a low of almost 16,439 and the market closed at 16,540. As you can see today the support was at 16,526 and the resistance was at 16,680 and the yellow color lines that you see here and here are previous days support and resistance. The market opened with a gap up of 20 points and during the first stop until 1 o'clock the market moved in the sideways trend and later after 1 o'clock it made a good move and at the later end of the closing hours the market recovered for a little extent. So today in this video let us discuss where did I take my trade, what was my stop loss, what was my target and see whether did I make profit or not, and later in this part I will share some important points about art of keeping the stop loss and targets. And at last let us see the positions in Zerodha account and the order book and let us end this video. So guys, there is no entry in this first 5 candles. So because if you take the entry here, you need to keep your stop loss right below this candle or right below this pivot, and your take profit is only this resistance. So you will not go long somewhere here, and even you will not go short somewhere here. If you want to go short, you should keep your stop loss somewhere here, and there is less possibility of beating these pivots because these pivots might act as a good resistance and good support as well. If the market is above these pivots, it will act as a good support. The market is below this pivot will act as a good resistance. So at this point we don't have entries, and our first entry was somewhere in this point, and we kept our stop loss somewhere right above this, and we took our profit at this end of this candle. So this is the only trade today we have taken. So let us consider this as in 3 pivot lines. So the center line which is given a maximum priority. So whenever the market is just right above that, let us consider the market is falling from here, and whenever there is a good closing candle below these 3 lines, whenever the candle closes below these 3 lines, so this is the point of entry we can take. We can keep the stop loss right above the center pivot, or we can keep our stop loss right above the 3 pivot points. But as you can see in this candle, there is no closing below these pivot points, so hence we have to wait for the next candle closing, and the next candle has been closed here. As you can see, the distance between this point and this point is something which is very huge, so that there is maximum possibility that the market can reverse and take your stop loss, and your target is too small because there are 4 points I will discuss later in this video, where these 4 points will definitely act as a support and resistance. So considering this as a previous day low, there is a high chance of market reversing. As we expected, the market again reversed and it took our stop loss. In case if you have not exited somewhere here, we would have booked loss somewhere in this zone. So once your risk reward is been met and once your profit target is been achieved, you should just exit the market and go for the next trade opportunity. So from this trade, my risk reward was almost 1:4. So this literally means when I lose 200 rupees, I can gain 800 rupees. So this is the logic behind the risk reward. So as you can see in this huge red candle, there is a closing below this pivot line. So we could have gone short somewhere here and kept our stop loss somewhere right above this, or if you are not willing to risk so much of your money, you can keep a stop loss right above this middle pivot, and you could have easily waited until the previous day low or today's support zone. So this is the second trading opportunity, and this will be the first trading opportunity, and the third trading opportunity was when this support line is broken. So as you can see, it didn't give a closing below the support line, so we have to wait for the next candle. So when you take the position somewhere here, and your stop loss must be right above this, because this yellow line is an previous day support. So you have to definitely keep the stop loss right above this. So it is huge stop loss, so you have to wait for some retracement. So in this green candle we could have gone short and kept our stop loss somewhere in this point and take our profit according to the risk reward. So these are the trading opportunities, and we could also have entered in this green candle, but as you can see, this is the candle that has been formed at the closing hours of the market, so hence there is no entry. So our first entry was somewhere here. We could have easily gained profit 1:2 or 1:3. So in this setup we have almost gained 1:4, and the second entry which you could have taken was at this point. The third entry which you could have taken is at this point. So today totally 3 trades activated, but we took only 1 trade. So now let us look into some key points and key statistics. So consider this as an pivots, consider these blue lines as today's support and resistance, and consider these black lines as previous day high and previous day low. So these are the 4 important points, that is PDH, resistance, support and PDL you should know while trading in intraday. So this will give an extra edge of where to take profit and where to keep our stop losses. So consider yourself that the market has opened somewhere in this point. The market moved until the resistance zone and it made a slight bearish candle. So what is the generalistic idea, guys? We can go short the market somewhere in this region and keep our target somewhere in this pivot, or once the pivot has broken we can keep our profit target in this support region. And where should you keep your stop loss? So we should keep our stop loss somewhere right above this resistance zone. So this is how the intraday traders would keep their stop losses very tight so that they will not lose more. So there is another next scenario where your PDH and resistance are very near. So let us consider your resistance is at 100 and PDH is at 102. And the market has come here and it made an light bearish candle, so you are going short here, keeping your target somewhere here. And guys, where do you think you need to keep our stop loss? Many of you will keep our stop loss somewhere in this zone, but as soon as you keep your stop loss, the market would reverse and take your stop loss, and market will form a bearish candle somewhere here, and the market will reverse and it will come until your target levels. So many times PDH and your resistance go hand in hand. So whenever the difference between the resistance and PDH is high, you can keep your stop loss right above the resistance. And whenever the difference between the PDH and R is low, you can keep your stop loss right above the PDH. So as same, it goes to the support line and previous day low line. So these are the very key points about PDH, PDL and resistance and support zones. So these are the major regions where the market will tend to reverse. So we should be always careful in these regions and try to book our stop losses or even targets as soon as possible when these levels are triggered. Now let me go into the Zerodha account and show you the positions that I have taken and the order book, and let's see the timings at which our orders are being executed, and let's see how much profit did we make from this trade. So this is the position, guys. As you can see, we made a profit of almost 962 rupees. And let us go into the order book. So this is the order book, and as you can see at 950 we have shorted 16,500 call 50 quantities at 150 rupees, and after 3 minutes at 953, so we bought back at 131 rupees, making an overall profit of 962 rupees. So this is the trade today, guys. So that's it from today's video, guys. Hope you have learned something new about PDH, PDL and support and resistance zones. So thank you for watching. Have a nice day.